Hi, this is Zach May with the Bulletin Board Heroes here at Zach's Traders Cafe for Sunday, the 6th of April. Starting off with the FTSE 100, which I looked at yesterday as a special, and obviously hasn't changed much since yesterday. But what is interesting, what maybe the points just to underline, main support here is actually at 8,000. RSI is at 20, which is very oversold. It's most oversold we've been for well over a year. So ordinarily, if we weren't faced with the Trump tariff horrors, would be expecting some kind of rebound back towards the old broken support line there at 81.80, the floor of the broken rising trend channel there from the end of 2023, and then potentially another move down to retest the 8,000 area. Worst case at the moment is that we have to go right down to 77.25, which is the floor of the triangle in place since May last year. But hopefully it will not come to that. Obviously, the situation is still very fluid. Moving on to the DAX, which has had a bit of a month from hell so far, only in just a few days. The giveaway in terms of the breakdown was actually way up there at 22,500 on the 27th of March. That was a gap down, and basically that was an island top, a bull trap island top reversal, quite a rare event, I suppose, in the indices in the recent past. And then we fell out of the rising trend channel from November around 22,100. We feared that we might have to head down to the 21,500 area, the floor of the initial February gap. That was our worst case scenario. Obviously, things have got much worse than that. And at the moment, the new call would be that we have to hit that 200-day line there at 19,900 and also test December support there just near that level. RSI a bit higher relatively than the FTSE, so it's at 29 rather than 20. So maybe one would argue that there is a little bit more on the downside here, given that maybe the DAX is lagging the downside that the FTSE has already delivered. On the upside, the first sign that we might be over the worst would be an end-of-day close back above that late January support there around 21,000. But probably at the moment, most people are just looking to the downside. Final point here is that we actually had an RSI 50 failure at the area of the 50-day moving average, 22,400. So we were warned a couple of times on this situation. Moving on to the Dow, and here a complete horror story in the sense that we have the RSI here down to 23, not as bad as the FTSE, but basically gone back to where we were back in June last year, near 38,000. Pre this particular breakdown on Thursday and Friday, we were looking for really 40,000 to be the floor for this market, but obviously we've overshot immensely and could still have to retest down to April support there, 38,600. Maybe on one final selling climax day. In terms of the upside, there is a level there from back in August, so an end-of-day close back above 38,400 could be a sign that we've seen the worst. And as you can see from the RSI trace, actually the first warning was an RSI failure at the end of February when we were up there at 43,500. So the charts and the leading indicator that the RSI is have helped the day. There was also an RSI failure up there at 42,500 in the last week of March. Moving along to a situation which is not quite so fraught, which is Bitcoin. And here, what is interesting is that we've still managed to hold on to the floor of that rising trend channel from March last year. We call that now around the 82,000 level. The problem is, though, that the RSI configuration here not great. So we've had failures here since the beginning of March. Maybe given that this market hasn't broken down, you can see actually all the failures we've had in the RSI 50 area. One at the end of February, one, the main one there in the recent past at the beginning of March, and then failures in the low 50s for the end of last month, and two already this month. So if the RSI means anything, it is suggesting that we will roll over and head down towards the 74,000 area, which we have been fearing for quite some time. At the moment, the stop loss on the negative argument is 86,400, and the 50-day line, and remember, we were told a few weeks ago that there is a big bear trader here short of $332 million worth of Bitcoin and looking for 68,000 and then 69,000 and then 58,000 as potential targets. So at the moment, that person is mildly on side. Moving on to gold, where there was a rug pull and on Friday, but the market managed to revive itself. The previous call here was that 3060 or so would be potential support, only because that was the resistance back in March on the record peaks then, and it's good to see that the market has actually bounced almost exactly in that area. We are still factoring in the possibility that we have to trade down to 3020, which is the floor of that rising trend channel from November, but at the moment we still have the potential of a move to the 3200 area by the end of this month. Lower than we were expecting before or hoping for, but 3200 seems to be valid while we're above that 3060 zone. Moving on to pound dollar, which I think is worth looking at because we haven't looked at that for a while. And here, amazing that this market managed to rally from 121 to 132 in the basically the first part of this year. There was the possibility of hitting the top of that resistance line there, the top of that falling trend channel from the end of 2020 as high as 133, but obviously the latest news rather killed that. We're back near the 200-day line, and ironically, both the 50 and 200-day lines are both rising at the moment. They are obviously lagging indicators, and also the other point is that they are going into Golden Cross, which may obviously be abandoned now. 128, the obvious support there, which is the 200-day line. Below that, the 50-day moving average, 127.30. But ideally, we stay above the rising 200-day line and then fulfill the idea of a move to the upside. There is an uptrend line there towards the area of the 50-day moving average. Maybe that's worth looking at as well to see whether this market finds support there. Moving on to the stocks, and an unlikely winner at the moment is EQTEC, and here you can see that we have managed to develop or build on the rising trend channel base that we've had. Rising on Friday, quite a miracle, I suppose, anyway. Rising 50-day line off the low, and above that at 0.54, looking for the top of the rising trend channel from October at 0.91, perhaps as soon as the end of next month. Ideally, there's no price action now back below that 50-day moving average. Onto a stock which I don't think I've ever covered before, and may never cover again, actually, but rising trend channel base here. We've got the unfilled gap to the upside that we had at the middle of last month. Very strong signal that can be, and looking for the top of the channel there at £4.40 as soon as the end of next month. Maybe even by the end of this month. You can see that the 200-day line was at resistance in December, so presumably the stock could make a beeline for that area, especially while we're above the rising 50-day line at £3.71. On to Goldstone, which has had its various issues in the recent past, but looks like the funding situation or the loan situation is sorted out. Bouncing off the floor of that rising trend channel there from June, and looking for as much as 2.2 pence by the end of next month. Remember, this is a gold producer. If you're cautious, you would be waiting for a break of that resistance line there from November at 1.2 pence on an end-of-day close basis, and given what a rocky ride this stock can be, that may be the thing to do. But the 200-day line rising there already at 1.15, so that is helpful. Onto a stock which I don't cover as much, or I haven't covered as much as I should have perhaps, which is Mineral and Financial. The reason we're not covering it that much is because for years it seemed that the shares were just not moving at all, which was basically the first part of last year, or most of last year actually, just in a range between 10 and 12 pence. But now they have pushed higher, and we're looking for the top of that rising trend channel from August as high as 35 pence by the end of next month, while we remain above the floor of the channel there at 22 pence. So that looks now like a decent risk-reward trade. Moving on to the stock of the year, or one of them so far, which is Metals One, rising 30% yesterday, or rather on Friday, breaking the best case scenario target we had there at 20 pence. We're actually now looking for an even better scenario, up to 40 pence perhaps by the end of next month, if we can remain above that 20 pence area. Probably the line in the sand is above 15. We're looking for 40 on metals one. Moving along to Mkango, and here a wonderful progression here. Great flourish on Friday with presumably with the Chinese news on rare earths. Top of the channel there, 23 pence. We're looking for that by the end of this month while we remain above 13 pence. Friday support. You can see there's an uptrend line in the RSI window as well to help us along. I think the Narf situation maybe it took people by surprise. The government funding aspect, I think, was great. And the rally there through recent resistance at 0.53 up towards the 200-day line. Initial target here, 0.8 pence. Above that, we're looking for 1.2 pence or more by the end of next month. I think the key here is staying on the right side of that gap there from December in the low 60s. Moving along to the last two. The first one is Shuka. And here, gap close, buy signal to end the week. The RSI here went down to 2, which is about the lowest, obviously, you can get by definition. So certainly not an overbought situation. In fact, a very, very oversold. And basically, we're looking for that resistance line there at 4.6 pence as a minimum for the shares. Ideally, they get up to the area of the 200-day line at 6.3 pence by the end of next month, or even sooner. Ideally, we'd see that by the end of this month. Finishing off with Wishbone, which has sort of rejigged itself, and here you can see that we've got the start of a potential recovery here. Rising trend channel base, which probably I'm the only person in the world who can actually see that. 0.2 the target there by the end of next month. All we're looking for now is an end of day close above 0.12 to give us a potential move up to 0.2 or 0.21 over coming weeks. That's it for me today. More updates tomorrow.